about the need to retain competitiveness in the international capital markets. Can you just elaborate on that a little bit then?
Sure, we're an externally funded economy like Australia, and external funders look for a return on their funding. So that is one of the things we need to think about. We're not just talking about demand for funds in all of this. We're talking about supply of funds as well. We've got to look at both sides. So this is effectively a price in the middle there, and we're saying a price near zero is not likely to be helpful.
Presumably New Zealand, if we did go down to near zero or zero, people wouldn't invest here because it basically a small country has a lot more risk than a larger economy.
Much less incentive to invest here. Yeah.
Dr. Bollard, could you run us through how this recession compares with previous ones?
Yeah, well, internationally, it's pretty clear now that we're in the worst event since the 1930s. We've been saying that probably for some time, but we can say it with some authority now. The IMF is speculating that the world will contract this year, first time for a long time. The World Bank has said that they expect international trade to contract this year, first time since World War II. So it's a big event like that. It's a bit different from some previous events because the financial sectors have been much bigger, they've been much more of a catalyst, and they've been there to spread contagion a bit like a disease between markets much faster and more broad spread than we have seen in the other downturns, which I guess would be the early 80s, the late 80s, early 90s, the East Asia crisis and the tech wreck. So we're watching internationally worse numbers than in any of those events. We see them worse on financial markets, on spreads in financial markets, also on equity markets. We're seeing pretty much the same story back in New Zealand markets as well. So the sort of contraction that you've got in this picture, the negative output gap that you'll see on one of the graphs there is, I think, probably bigger than anything back to probably beyond the 80s.
It's pretty deep. I guess the other aspect is, if you look at the New Zealand recession, the projection is for a total of 6 quarters of negative growth, which will make it the second longest New Zealand recession since the 1960s, the longest being in the late 1970s, mid to late 1970s.
Dr. Bollard, fundamentally this is a relatively optimistic scenario that you're painting in terms of a bounce back, both the New Zealand economy this year and then of the international economy over the sort of 12 to 18 month horizon. And you're forecasting 4.1% US growth in 2010, both of which, on the face of it, given what you've just described, don't necessarily line up with everybody's expectations. Has any thought been put into having an alternative scenario or an alternative set of projections which model basically an alternative outcome that we basically don't have a recovery in the international markets?
Yeah, I'm just slightly surprised you would consider the worst recession since the 1930s as an optimistic scenario.
I mean, your statement says 1970s, and he just said 6 quarters of negative growth, which is the worst one. And no, he's not. The statement doesn't say 1930s, and the numbers in your actual forecasts don't line up with that particularly.
One correction: we forecast the US to grow 1% in
2010.
1%.
But you're only forecasting a 2.5% negative growth this year.
The line above is Asia, which we project to grow 4% in that period.
Okay, well, you're also looking at 2.5% negative in the US, which is also, I mean, they did 2.5 negative in the last quarter, I think, didn't they? Or close to, or 1.7 or something. So, I mean, basically it looks optimistic. Is there been thought of looking at a more negative scenario?
Yeah, there has. I mean, this isn't optimistic, this is extremely pessimistic, but we do still hold to the basis that if things go down, they go up again. And the more they go down, the more there are some forces, there's more money around, there's more attractive prices, and as soon as there's confidence together, there will be rebound. One of the challenges we all face in doing this is some of the models can show that after a very nasty recession, you get quite a strong resurgent growth, perhaps only for a year or so. In recovery from that. But we don't have that in here. We've got a very fragile growth recovery in this. Yes, internally we will do further scenarios, and we'll look at what-if situations. We haven't done one. There isn't one for publication in here this time, but we'll play around with worse and better outcomes. We have said in this we think the risks are slightly to the downside of this, but not so far to the downside that we want to shift our forecast. This is our forecast.
Some people have talked about what they call an L-shaped recovery, which is what happened in the 30s.
I've heard L, J, V, W, and I've even heard of B. I don't know how B happens.
Well, that's as may be, but an L-shaped recovery is not a recovery, essentially. So there's no bounce back, and that's what did happen in the 1930s. Eventually there was a brief bounce back about 3 or 4 years later, and then it went back into recession again. I mean, does that call for a totally different set of policy?
Yeah, if we were in the 1930s, you would get a totally different set of policies. But we're not convinced you have 1930s
situation
conditions here.
So one.
You say you got very fragile growth, but the projection is for 4.6 or 4.8, depending which measure you take, in the March year to 2011.
What's that for?
For New Zealand growth.
Yeah.
We also reflect in the statement that there is a great deal of uncertainty around that projection, and it's very hard to predict the
central projection. 4.6 doesn't sound fragile.
The confidence interval around it is what we're talking about. There's a very wide range of possibilities.
Can I point you to figure 2.1 in the statement, which shows the current recovery relative to all the historical recoveries New Zealand's had, and this is by no means the strongest recovery.
We usually come out of these nasty recessionary events with a year of very strong growth. It doesn't persist.
Dr. Bollard, yesterday the Prime Minister complained that the New Zealand media was being negative about the state of the economy, and that he detected signs of what he called interesting signs in recovery. Do you share any of that optimism?
Well, we do at the first differential stage. Sorry to be mathematical, but we are seeing a slowdown in the rate of new bad news.
Is that it? He pointed to tourism, but the figures in the monetary policy statement are quite sort of glaringly opposite to that.
There are some parts of the New Zealand economy that haven't been badly hit and are doing quite well. That comes through clearly in our business visits. If you look at some of the business opinion surveys, there's also some parts of those that don't look anything like as negative as what we're talking here. In addition, in relative terms, New Zealand and Australia aren't being hit, as commodity exporters aren't being hit as hard as those countries with big housing sectors in crisis, big banking sectors in crisis, and now big export manufacturing sectors in crisis. So we're better off in that sense, but that's a relative thing. We do think we're relatively advanced through this cycle, and we'll start to be looking fairly soon for this fragile recovery. But it is absolutely fragile. We haven't seen many early warning signs on that, and I know this morning we had yet another buoyant real estate agent set of commentaries, and they really need to wait till they've got a whole bunch of those before they start seeing a very good buying and selling environment.
So what's the risk if people think we've hit a trough and we haven't, the false recovery scenario?
Oh, well, the risk in any of this is that people don't understand where prices are going, and they're not in a position to make best quality investments that they would. That's been a real challenge over the last 4 years. It was a challenge when prices were high with oil prices. We saw all sorts of dumb investments out of that were clear when the prices came off. Now there's some risks that we're missing opportunities because prices are so low. And that's why we'll recover as soon as people in New Zealand can get a reasonably confirmed idea of where prices are going and some confidence that when they invest they'll actually be there.